Right. There's Tasty Trade. Log you out. The Windows. That Windows back end forces you to reboot. All right. So I think the story of the morning is Mongo, baby. Mongo DB came out with earnings, and they were a blowout, big blowout earnings. Way up here. Is it over 400? It's 405. So it's up almost $100. But MongoDB absolutely blew it out for earnings. And they basically stated all kinds of stuff about AI and blah 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 blah. And then you had a ton of analysts come out, and you had, the Pap Schmear and RBC and Run MDC and you name it. They've all come out and, reiterate or change our price target. It's like, my God, where were you yesterday, analysts? But so they all revised. And that's kind of got things cooking here. And speaking of cooking, I got to turn on my other heat. Because, all right. So, and that's kind of the story. And then I guess the moral of the story is I did nothing, right? I'm glad I didn't do anything, because if I would have done something for earnings, I would have likely been having to manage now some upside calls that I wouldn't have wanted right now, because this would have never been calculated in the expected move. If you bring up Mongo, they were expecting an $80 move in. Oh, wow, look at that. It was an $80 move out in December, and that's about what they got. That is about what they got. So it is absolutely, I didn't even realize it was that much. I wouldn't have done anything in here anyway, because the options in here in Mongo aren't really that good. It's gotten better, yeah, but the liquidity in here has not been really good, in my opinion. In trading it. So there's that, which is nice. So Mongo blowing out, and that is pretty much the story. Then I think there's some other stuff hitting the tape this morning. You have a Jasper, JSPR. JSPR up really big this morning. JSPR. That's not a future. Jasper Therapeutics. This is a cheapie, but that's up real big. I don't really know what they do. To me, I don't really trade this, only because it's, it's kind of it's garbage. It's a garbage stock. It's had some really wild swings, and it's kind of a meme. But anyway, I'm just noting it because it's on the tape. And then there's a bunch of other things. But as far as like the movers up, you got Clear Spark. I see that's gapping up. MSTR is up about 2%. That stock needs a little bit of relief. And MSTR is up because Bitcoin is up about 1,700 or so this morning. So that's kind of getting a bounce as well. And everything pre-market here. And I think Mongo is kind of lifting some of the ships here on its back. I mean, not by a lot, but, we are gapped up this morning. And then I know last night we had gapped down. But so it is nice to see that we are kind of hitting it to the upside. Now, as far as levels today, I think we're going to have a much better. I think we're going to have a much better market for some action. We have a pretty nice range here. I really like R2. I don't know. Again, that's going to be a pretty decent move. That's another 30 handles away from here, but I really do like this spot up here, R2 68, 69, 75. And that's a Wapner 4 o'clock on that. 68, 70, 68, 69. It says 68, 70. That's fine. I can take that. So I'm looking at that for a possible short. There's also this area up here that I have marked previously, which is R3 from way back on 11/17, which is 68, 65, 25 is also a nice price I like as well, because it's not only a area here, but it's a swing high from back last week. All right, this is already off the table, 68.55, because we hit that overnight and yesterday. So that is off the table. Now, to the downside, 68.07.25, looking pretty ripe, in my opinion, for a possible long if we slip down today. So 68.07.25. And then again, we're still going to be holding on to this one, which we marked yesterday, which is 67.92.50, which is the swing. Oh, what the heck was that? The swing low from back last week. And then as far as R3 and S3, I likely not even, if we get anywhere to those extremes, I don't know if we really want to stand in front of a freight train either way if we really move that fast and furious. I just changed to the NASDAQ. What the hell was that? Oh, man. Anyway, so there you have it. So those are the spots today on the ES. And then we'll actually look at the Russell as well. Because of late I enjoy trading this as well, a little bit more actually than the ES, and the reason is that the Russell has kind of led to a little bit better price action of late, and so 2504.70, which is R2, I'm going to mark that one off. It's 25.04. It's actually a swing high from back on the 28th. So I like that area as well. It does look like there's quite a bit of resistance up here. There's definitely some volume action as we get near that 25.04. Again, it's near that big, as I say, always be aware of the BRNs, those big round numbers, NUMBAZ, as we say here in Jersey, numbers, not numbers, numbers, because those DAZ numbers are important. So there we have it to the upside. Also, R1. If this is a spot today where if we, and this is important, this 24.9660, if we have a bit of a methodical move here and it's not wild, fast, and furious, this is a really good spot for a short. It's close to the big round number, but not close, not that close. And if we do get up there with some slow movement, I would really be interested in taking that short down up there, 24.9660. Also, really liking S1 here, 24.7040. So we're going to mark that. So a lot of spots today. And the reason is yesterday's price action kind of set a lot of this up. And then sometimes this is how it works. You have a day like yesterday where there really wasn't many good setups. And again, in my opinion, I'm sure there were plenty of people out there trading fake money in futures accounts with funded companies that had plenty of setups because of ICT and it was a fair value gap. But anyway, I'm sure there were plenty of other there was nothing really yesterday that interested me. So I kind of unplugged, and I'm glad I did because it really turned out to be, we kind of gapped down, and then we gapped down a couple other times. There was a couple of small rallies, but we pretty much hung around down about 30 clicks most of the day, and nothing really, didn't really move much after that. It was kind of a chop house, and so I don't like to be in a chop house, so I decided to sit on my hands. So there's kind of the spots on the Russell. I don't know if I'd be interested down here at 24.62 on the Russell, only because there doesn't really seem to be much down there. I'm not even seeing a lot of I'm seeing a lot of holes in here, right? You can see down when you get to our S3 down here. Let me get my pointer. It's always important. I got my pointer here. There is a huge volume hole in here, which likely, again, one of two things usually happen at these levels when you have this kind of volume hole in the profile. Is you kind of get down here and you run out of steam because there's no interest. It's like that lack of interest type of thing once you get down there, and then the selling subsides and it quickly reverses and bounces, or you run through this area really quickly and it becomes really bloody and nasty, and then you likely would get a drop here right around this area, which is around 24.18. I highly hope, I really hope that doesn't happen. I'm not looking for a crash. I'm not calling for a crash, but I would consider that as like a mini, I don't even say crash, but that would be a definitely a mini little correction if we actually got back down there, even though that's only about 80 points away or 50 points away on the Russell. That's a pretty decent move and would basically wipe out any of this upward momentum we've had. So anyway, so that's why I'm really not interested in S3 here. That if we get down there, we'll have to see what happens. So those are the levels today on the Russell and the ES. And then maybe, folks, just maybe, come the new year, maybe I'll start trading the NASDAQ. And just full disclosure with myself and folks maybe new here. I know I have a bunch of new followers that I've seen here on YouTube, which is cool. Like, welcome aboard. I do answer questions, but I don't really look at the comments very much, as you can tell. And I don't really get that many comments, which I'm happy about, because I would think if somebody's upset, that's usually when they comment. Very rarely people comment when they're happy with what you say. So, but maybe I'll start doing the NASDAQ. But in full disclosure, the reason I don't trade the NASDAQ, it's just not wired with the way I trade markets. And the way I trade markets is especially futures, I kind of think I'm a rare breed when it comes to trading futures, where my mentality is I like very tight stops on entry, because I feel if my point of entry is truly correct, I should be able to use a 10 to 12 tick stop, 12 max. On the NASDAQ, I need to actually increase that a bit more, just because of the price action in general. And the NASDAQ moves a lot more than that. But again, that's just how I'm wired. And I will take a trade 2 and 3 times in a level, even if I get stopped out, because my mentality is if I'm wrong, I want to get out of the way. And that's just how I'm wired. That is how I have developed my strategy. And it's worked for me. I've had more. Now I'm not going to say it's made me like it's made me a effing genius in trading futures, because if I said that, I'd be a complete asshole. Like, I put myself in the same boat as all these other clowns out there doing ICT and doing these funded accounts, trading fake money. It's worked. I've made more money trading futures than I've lost. And so, in doing that, and it's because I've changed that philosophy, because I used to go in with the premise that, hey, I'm right. I'm going to use a 20 or 25 tick stop. And what has often happened with that strategy is by the time I realize I'm wrong, I might not be wrong. My timing may have been wrong, but my entry, again, that timing of when I went in the trade may have been wrong and not the entry. And I found that if I gave it maybe another shot and had a tighter stop, I have a bigger chance to be successful rather than hanging in something that has a 20 or 25 tick stop and spend all that time to be wrong, right? And so it's not just an entry thing, it's a time in the trade. Because again, if I'm wrong, I want to be out as quick as possible. And doing a tighter stop has proved to me that, hey, if I'm wrong, I'm getting out of the way and I don't care. And I don't need to prove to myself that I'm right. And I think that has been a big change in my trading style, which I've been using this approximately like 2018, 2019. It was before COVID. So 6-7 years now. But the NASDAQ, I guess, and what I'm saying is that when I've done that same approach on the NASDAQ, it just doesn't work. And it's because of the price action. You just look at the tape. If you were to overlay the price action in the NASDAQ to the price action in either the Russell or the ES, the Russell is probably a little bit more, a lot closer to the price action in the NASDAQ than the ES. ES is definitely a very slower trade. But the NASDAQ, that approach doesn't work on the NASDAQ. It's because the erraticness of it and how quickly it moves in one direction or another. It just doesn't bode itself as a good investment choice for my trading style. So anyway, that's why. And so I've been contemplating possibly changing my trading style a little bit and possibly start doing the NASDAQ because, like, look, face it. I realize that the NASDAQ does present a lot of good opportunities, probably more so than the ES and the Russell, just because it moves so much, and that, maybe I should try doing it and trading it a little more. So, maybe come the new year, I am going to start doing a little bit more NASDAQ. Maybe not huge, but maybe a little bit more so, and at least incorporate it in some of my trading schemes. So stay tuned. And I will tell you now, if I'm going to start doing it, I will start doing it in a sim account. And I will do it live, and but I'm telling you right now, I'm going to be doing it in a sim account, is because I'm going to be trading it. It's going to be new for me. Recently, not that I never traded the NASDAQ. I've always gotten my ass handed to me in it. But it's going to be new to me, and I'm going to be trying some different strategies. So I'm going to do it in a sim account. I'm not an idiot. I'm not going to just start trading real money in something that I haven't traded. So, but I may start doing it, because I've really been looking to kind of start trading another product. So stay tuned, and we'll start, talking and looking at those. As far as, anything else, let's look at earnings, because there's going to be a few tonight that I think are going to be worth our while. And we kind of went over CrowdStrike yesterday. CrowdStrike is up a bit today. So the trades we talked about yesterday are going to be a little bit different. Volatility in here continues to be okay. It's not great. But if you want to look at, we want to look at the trades we did in CrowdStrike, they're all going to be valid again today, even with this 5-point move, but you might have to move the strikes up on the put side a couple, and on the call side a couple, up and down, to just adjust it just to get into that one standard deviation, right? Because we always like to kind of keep that one standard deviation, which runs usually between it usually runs between a 15 and a 10 delta. And right here you can see that's about 13 and 10, or in that it's 11. And then if we come up here, we're at and there's definitely call skew here. But these are like 20 and 18. So it's, give or take. So that's going to move those strikes because of where CrowdStrike is. We've talked about Dollar Tree. There was no there. I did not see. That is tomorrow morning. That one's tomorrow morning. So this one, I didn't see much to do here. If I was going to do anything, I would do it in December. But again, 37.4 volatility. Here's historic volatility. I don't really see much elevated. I would say if this thing was in the 70s, I'd probably make it a lot more interesting. At 37.4, to me, it's just a stretch to try and even think that there's anything possible in here. I just don't. I just don't see it. I just don't think you're getting paid. And then there's CRM, which I have disclosed as well that I'm in a number of positions here, but many of the iron condor trades that we've talked about, I think are going to be very nice here, because this volatility at 56.3 I think is really good based on where things are. Overall volatility is, liquidity in here is okay. I really can't say one way or the other. I will say one thing though, is that you will have a bit of a problem. I shouldn't even say problem. It won't be really easy to get out of a trade in CRM, because generally it is a little kind of a pain in the ass, just from my experience. And I've done well in CRM over the years. It's treated me good, Joey, but it's treated me pretty good. So I'm not going to complain about it. But I will say I can admit that it can be a bit of a pain in the ass to get out of trades. So what I would be looking at here, it's looking at a $20 move, $20 in December. I would stick to December, and I would go right around 210. And I'm going to change this because this looks like I'm in my IRA again. Margins are generally kind of suck in this. I would probably do a 210, 260, really just inside the one standard deviation, just to capture a little bit more premium. Let me just do this. Yeah, I'm in my IRA. And margins in here are never great. And you can see here, I'm going to use, they're going to require $2,300 of buying power to do a strangle, which is a little out of my wheelhouse. And if I was going to do an iron condor, I would probably do a 10 wide. So I would probably do the 260, 270, 210, 200. Now you can see they have a nice array of strikes in here. They have the $2.50 wides, and as well you could also see that many of those $2.50 wides, right, the 2750s and the 2250s, they've recently been added, and you can tell that by the amount of open interest or lack of open interest that they've been added relatively new. So that's where I would sit here with this. I would bring in the $2.58. Likely you're going to be able to do this for about, I bet you can do this for about $2.60 today. I really believe you would be able to. And this would be my earnings trade for CRM. And they do report tomorrow. So it's not today, but this would be where I would sit on CRM. And I think that is a pretty healthy trade there, given where the volatility is, where the one standard deviation. I know we're inside of that, but we're kind of right on the edges of the expected move, which makes this more of a volatility play, right? Because all we're looking for here is to get that crush after earnings and not really have it move one way or the other, pretty much move maybe $10, give or take, either way, and we'll be in good shape here and likely be able to buy this back much cheaper. All right, and so that is how we sit for earnings. And then looking at CRM, let's just look from a technical point of view, because it's always good to kind of do that level of mental masturbation with this stuff. CRM overall has been a really poor performer this year. It really has. In fact, it's done quite lousy compared to other stocks in this group, and it's likely CRM's issue is competition. Just as long back as maybe 3 to 5 years ago, there really was minimal competition for CRM, and the stock was doing quite well and did quite well, and literally was like one of these companies that every time they announced earnings, it would just like blow out and the thing would go higher. But that's not the case as much anymore. And again, there's a lot of players in this space now, and really what's been keeping them afloat is just renewals of existing customers, because let's face it, a big part of this business is selling licenses and renewal fees, and that's pretty much kept it afloat, because I can't say that they've actually done a good job in growing their business and customer base, because if they had, the stock would be $300 or $400 likely. So anyway, it really hasn't. So I'm not expecting anything monumental out of earnings either. So when you put that in perspective and you look, we're kind of in a pretty decent spot. Here's a swing high here, which is about 266. Here's the swing low. We're down 210, there's a high volume node here. There was an area of consolidation, pretty heavy consolidation just back a couple of years ago. And so, we do have what I think is some pretty good support here at 210. So again, pretty decent spot, from my opinion, to be in that area of CRM. And this is what it looks like on a little bit smaller time frame. This is the 4 hour. This is the 260.2, or is it 267 down here. And this swing low was 222, which is just recently too. And then a little lower. So there you go with that. And so that is really it as far as things going on. And then I just saw Boeing hits the tape pre-market highs after upgrade, whatever that means. Boeing just got, I don't know what the attraction is on Boeing. I actually took it off my watch list because I feel like this thing just hasn't gone anywhere. I feel like this thing's been 150 to like 225 for freaking ever. I feel like it's been that same. I feel like it's been that same price, and it has. Look at this. Look at this. I even have stuff on here that's been this long since I've actually looked at Boeing, and it has not effing moved. It has not freaking moved at all. In 5 years, 2020. The highs here are 76, 78, and the lows are 113. And it is just chopped. And to me, it looks like this is more likely, just based on previous price action, it's more likely to come back down here than go back up. I mean, this is kind of, again, I'm not really a technician at all, but this doesn't look. This by no means looks bullish to me. I don't care what analysts say. This looks like a stock that's in a little bit of a fall here. So yeah, Boeing. And then I don't know. Let's just look at Boeing. And why not? I always like to see what I guarantee. There's probably no volatility in here. Yeah, none, nothing. And so you got to be directional in here. Again, it's gapped up about $8, $9. I mean, why an upgrade? By who? Who upgraded it? Dewey Cheatham and Howe? Like, who upgraded it? Boeing forecast 6% annual growth in Africa, baby. Blah, 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 blah. Boeing's issues 2020 commercial market outlook. Are Unix secures contract. Blah, blah, blah. I don't see anything in here about no upgrade, so I don't know what that is. I saw that on one tape, but who knows? I don't see anything. Airbus says most. Blah, 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 blah. I don't know. Maybe I should see what the mines say. I don't know. I don't see any. I know it's gapped up today. I think the only thing that's Boeing has like going for it is the fact that it's got government contracts, but I don't know how great they're going to be either. I don't know. Maybe you sell a put spread here. I mean, maybe you buy a put spread, like maybe a put calendar or something. Be a little directional. Kind of sell a little strength here. I don't know. Maybe we'll see. I got to see how it opens. And that's it. That's all I got today. Let's look at Bitcoin's having a little bit of a nice bounce here today too. That's kind of likely lifting markets a bit. So there you have it. So I gave you my levels. We did some earnings. We talked about having sex in the office. So we're all set. And I'm still getting killed on a few things. My Oracle looks like crap. My AMD looks like a crap. And these are covered. This is a covered call, which that blew up in my face. I sold calls on my ADM. That stock didn't go fucking anywhere. And then the minute I sell a call, it goes up, right? Perfect timing, man, right? Awesome. For the most part. So a lot of this stuff is a crap. But I also have quite a few things that are looking pretty good. So it's a mixed bag. And so that's it. So have a good one. And hopefully everybody has a good trading day.